Hey, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over tax debt solutions. It's going to be an overview of the options for resolving back due tax debt. So here's the basic options: payment plan, offer and compromise, currently not collectible status. You can do nothing, or you can pay it off. So payment plans are the most common way to resolve back due tax debts for the IRS and states. Doing a penalty abatement after can get some money off too. And the reason this is the most popular option is a lot of people just don't owe that much money, and you do a payment plan and you're done. For the IRS, here are the most common types of payment plans: a streamlined payment plan balance under $50,000, which essentially means they take the balance, they spread it out over 72 months, and there's your payment plan. A streamlined payment plan for balances between $50,000 and $100,000. They pretty much take the balance, spread out over 84 months, and there's your payment plan. On the under 50,000, there's no tax lien filed. On the 50,000 to 100,000, they file a tax lien. If you cannot afford either of those payment plans, a lot of the time we're actually going for an offer and compromise. But if you're still doing payment plan, you can request a non-streamlined payment plan, and that requires a financial statement. For balances over $100,000, they're always going to require a financial statement. When you get a tax attorney, the first thing we're going to look for is offer and compromise. If you qualify for that, most of the time, that's the best option. So offer and compromise is the best tax debt solution in most cases. There are some exceptions, like when the tax debts are expiring soon. We'll actually have a link below to an explanation on tax debts expiring in a page about it. Here are the basic qualifications for acceptance of an offer and compromise. You have less assets than the tax debt, including dissipated assets. You have low enough income compared to the expenses. Your unfiled tax returns may need to be filed by you or the IRS. So when they're filed by the IRS, they call them substitute for returns. Some older years might have been skipped, and I've seen a lot of CPAs mess this part up. Some people just go to a CPA, they say, I haven't filed taxes in 20 years. And then they go file all these taxes for the past 20 years, and they add debts they don't need. Usually it's not 20 years, usually it's more like 10 years. But the reality is sometimes they're not looking for those old years and they skipped it and they don't care. So we call in and we find out what years they actually need. They put a code on it called a 140 code. If that code is not there and the tax debt is the tax year that is not filed is pretty old, they may not require you to file it. Sometimes you'd owe something, sometimes you wouldn't. But first off, it's less fee to prepare it, and it's just less of a headache. And if you do owe something, you necessarily don't always want to add a debt if you don't have to, and they're not requiring it. Number 4, estimated tax payments are current for self-employed individuals. So if you're self-employed and you just keep owing taxes every single year, that's fine, but this has to be the year that you stop. For example, if we're starting someone's case much later in the year, say November, and they have not paid estimated tax payments the entire year, and there's no way they're going to catch up on them, sometimes the best option is not offer and compromise, is actually putting the case into non-collectible status, letting that year finish, and then including that year in an offer and compromise. But going forward, they need to stay compliant and pay estimated tax payments. We recommend to our clients to pay them monthly rather than quarterly. It just works out better, and it shows that you're compliant, and it's a good chance that if the offer does get reviewed earlier, usually it does take more than a quarter, but if it does get reviewed earlier, they'll actually see payments on record already, which looks great. If there's a payroll debt, payroll taxes also have to be current for the quarter. We always recommend just using automated payroll services. Gusto is the easiest and best one that we think, and we'll have a link to that below as well. So currently not collectible status. It's a payment plan for $0. So this is a hardship status. The IRS determines you can pay $0 per month, so they shelve the collections case. Technically, every year they can kick it out and request a new financial statement. But if your income stays about the same, usually they renew the status, and they're looking at your tax return to see if your income is about the same. But this is the thing. Most cases that qualify for currently non-collectible status also qualify for an offer and compromise. So sometimes people at the IRS, they'll call collections, and they don't really tell them about offer and compromise. Some of the people are nice, and they will, but sometimes they'll just put it in non-collectible status. The case is over. And a lot of people think, oh, I need a lot of money to go do a settlement. No, you don't. You should be submitting the settlement when you don't have a lot of money. And so cases just sit in non-collectible. But most of the time, offer and compromise is better when you can get non-collectible. There are exceptions to that too, like when you have too many assets and things like that. And we'll go over that in a little more detail. So currently non-collectible status, part 2. So here's the reasons why someone would qualify for currently not collectible status, but not for an offer and compromise. Number 1, dissipated assets. Number 2, paid off home. Number 3, non-cashable assets worth more than the tax debt. Number 4, offer and compromise was recently already rejected. Number 5, they're self-employed and the prior 3 years of income are much higher than they are now. Now let's just talk a little bit in detail about a couple of these. So dissipated assets, that's, for example, you had a 401k last year while you owed a bunch of taxes, and it was even more than tax debt, and you just spent the money. Well, they'll call that a dissipated asset, and they're not going to accept your offer in compromise. Paid off home, there has been some exceptions to this. Usually you're not going to get it if your home is paid off and it's worth more than the tax debt. We have had exceptions where a home was very difficult to sell. It was in a foreign country, and we had someone else where their home was of such a low value that if they lost the home, they would actually be paying so much in rent that eventually they would not be in a good financial situation. They would almost be homeless, and that argument worked. Pretty much non-cashable assets are worth more than the tax debt. So sometimes you have something that's worth something and you can't sell it for some reason. Maybe it's a part of a business or something like that. They'll say, oh, it's still an asset, and sometimes they still won't accept an offer in compromise. Sometimes there's some flexibility on things like this. It's really case by case. If you're not sure, just you can give us a call and we'll go over it with you. So then one more thing we should go over, the self-employed part and the prior 3 years of income. They're not always super strict on this, but if you made $300,000, $400,000 last year, and then this year making $30,000, you're probably not going to get an offer in compromise. It's probably not worth submitting it. And I've seen a lot of places that will go ahead and just submit them right away and don't really even look at this stuff. And there's a good chance it's just going to get rejected and be a waste of time. And in those cases, you're better off putting it in non-collectible, letting it sit for a year or two or however long, and then going back and doing an offer in compromise. Essentially, they know that people's businesses go up and down, and they're going to say, well, hey, you were up last year. This is down this year. You might be up next year. So we're going to wait and see. When you're W-2 and you have a wage job, they don't really care. It's more what it is last 3 months. That's the most important thing. So do nothing and see what happens. There's another option a lot of people do. So some taxpayers prefer to do nothing and just see what happens. Eventually, the IRS will issue garnishments on wages and levies on bank accounts. So some people don't have wages and they don't have bank accounts, and it's kind of hard to get to them. Self-employed individuals might get their entire income taken, though, as the IRS will garnish 100% of 1099 income. For example, credit card processors. There's some people that receive almost all of their payments from credit card processors. They levy that, and they're taking 100%. Now, when someone's working on your case or you start calling them and dealing with it, sometimes you can get that, taken off or changed so you can continue. But if you do nothing, that's what can happen. Some states are better at finding people after they move on than others. So little notes on states. California and New York are notorious for finding people once they have left. I've seen some other states, they don't seem to find the people, but California and New York, they almost always seem to find people no matter where they are in America. There are times when doing nothing might be a decent option, okay? Number one, if your only income is from disability and there's too many assets for a settlement, that might be a thing. So if you live in your house, so you don't really qualify for a settlement, and all you get is disability, well, they really can't do anything to you. You could put it in non-collectible if you want to, but if you let it sit, there's really nothing they can do. I believe Veterans Administration payments as well will be exempt from that. Military retirement is not exempt, but Veterans Administration payments are. The debt is going to expire soon anyway. So if your debt's going to expire in a couple weeks or a couple months and they haven't done anything yet, some people might just want to do nothing and then it expires. Here's another option that's not as popular, but it's there. Pay it off. Sometimes it's the best route if you already have enough cash. The reality is that the penalties and interest on a yearly basis are really high. So if someone has the ability to debt pay it off in full, they're probably not going to be qualifying for an offer in compromise based on their financial information. Now, there's other types of offer in compromises. They're very, very difficult to get accepted. So we really go for the financial ones unless there really are good circumstances for the other kinds. Okay, putting the debt into a payment plan builds up penalty and interest, so you might as well just pay it if you can. The best option here might just be to pay it off. If you're paying off a tax debt to the IRS, you still want to request a first-time penalty abatement, and you may qualify for that. And we'll have a link below to that as well. You can take a look at that page on how to do that. So tax debt solutions, there's one for everyone. You can proceed on your own or get professional help. Either way, you can look at our guide below. It'll help you out if you consider doing it yourself, or you can even have someone prepare the documents, have someone review it for you. If you're considering a tax relief company, check out our video link below before you pay any of those places. They come and go very quickly. If you're doing it yourself, check out our tax help guide link below, like I said. If you want us to resolve it for you, get a free consultation with one of our expert tax attorneys. Just give us a call. It's 888-515-4TAX. That's 888-515-4829. or go to our contact us page. The website's very easy. It's just trp.tax instead of .com. And whatever you do, getting it resolved sooner than later is usually better. So some people say, oh, I need to wait till I make some money till I can file an offer in compromise. That's not how you do it. If you're getting an offer in compromise, just file it right away. If you think you're going to qualify, file it soon, file it right away, if that's the best option. If you're not sure, give us a call. We'll go over it with you. But if offering compromise is the best option for you and it looks like you're going to qualify, you want to submit it soon. You don't want to be waiting on making more money or things like this, because you'll end up having, sometimes you won't qualify for the settlement later. And if you're not sure, just give us a call, 888-515-4TAX. Thanks for watching and have a great week.